South African interest rates are currently at their highest level since 2016. And this, of course, after the South African Reserve Bank increased the rates yet again by 75 basis points. Now, some members of the Monetary Policy Committee voted in favour of the 75 basis point hike, while others wanted a 50 basis point increase. The latest decision brings the repo rate to 7% and the prime rate to 10.5%. But what does all of this mean for ordinary South Africans? So to help us through this discussion, we're joined by Dr Bheki Mfeka, who's a development economist and strategist. Dr Mfeka, thanks so much for your time. Welcome to Morning Live.
Thank you. Thank you for having me. Thank you to your viewers.
I suppose this decision was widely expected, but I guess we were in some way hoping and praying for some form of relief or just for the MPC to hold steady, but obviously that didn't happen. So just talk to us, from their perspective, the factors that they would have considered in raising the interest rate here.
Thank you. Actually, what has happened since the pandemic, as well as the conflict in US and Russia, there has been many events happening financially in terms of markets, as well as the prices, the inflation globally. So that has put so much pressure in emerging economies. You find big economies tightening their monetary policies, which affect us as a country as well. We also have domestic challenges that we are facing, which are huge and put pressure on the inflation. In actual fact, when we got the news that the CPI has increased to 7.5, that raises alarm, not only for the Reserve Bank, of course, for everyone, because inflation affects everyone. Yeah.
So, the fact that this was not a unanimous decision about the 75 basis points, why couldn't it have stuck at 50 basis points? Because, we have been seeing these steady increases. As I said, this wasn't unexpected given what's happening elsewhere in the world as well. But obviously, one would imagine that the Reserve Bank would take into account some of the pressures that the local economy and ratepayers are facing at this point.
Yes, certainly, Sakina. Actually, the governor clearly stated that they rather tighten now than regret later because of the pressure that, as you say, that we are seeing in the economy. If you look at the energy situation in the country, that's a serious threat. You look at the past events, climate change, the floods that happened, and also the general political and other instabilities that we're experiencing as a country, which has seen food prices increasing drastically, as well as other prices, fuel prices, as a result of global commodity prices. So all that required the bank to using their models, they are able to say, look, if we are pushing 75 basis points, we are in the good range to test in terms of the medium and long-term impact. Their target is to push down the inflation back to 4.5%, which, according to the policy, it will balance the economy and sustain growth, which is required.
But listening to, the variables that you've just mentioned, energy, the geopolitical situation elsewhere, all of those that you mentioned are likely to remain with us for the foreseeable future. So what does that mean for consumers going forward?
Yes, it simply means tightening the belt. I think the mindset must change, especially for consumers, as we go into the festive season. The idea that to save, it's bad time when you have to cut down on your spending. It should not be we can't equate money. We must dig down into our soul and see if we can be able to cut down on our costs while remaining happy, because we are happy people. We like to entertain ourselves, but we must look at ways of cutting down the budget and also saving. We have a saving challenge. People are not saving enough. When interest rates increases, those who have monies in their bank accounts, are getting returns on those monies they have. So we need to be able to change the mindset. Consumer education will be very critical during this point in time, and because it can be sustained with the challenges. We don't know when we'll come out of the situation, especially with energy and also the conflict in Ukraine, which affects food prices. We don't know when we're going to come out of this. So we need to look at various initiatives in the country. Food security will be very important, as many people, the majority of people are in terms of quality of food they are getting currently. As the prices increases, there will be a big challenge there. So we need to look at various initiatives. Those who can save, they must be able to save, especially stockpiles. I know they'll be going to end of year meetings. They should think wisely and be able to look at ways in which they can sustain saving those monies and get more interest out of them, and also look at investment rather than consumption. Because at this point in time, spending money on food and beverages may not be wise if you spend much on those, as well as other items that are really not going to give you, protect your money, and also enable you to have more money in future.
The problem, though, with what you're saying, Dr. Mfeka, is that for many people, it is not about buying luxury items, not even when it comes to food, beverages, as you say. It is about buying basic necessities, because the reality is that salaries have remained stagnant. The cost of living is ever rising against the stagnant salary. So how are South Africans expected to save? How are they expected to remain optimistic in these circumstances?
Certainly, Sakina, the inflation itself affects everyone. It's a monster because it takes away the value of the money that is in your pocket. So that's why the central bank had to increase the interest rate. Well, it will affect us differently. If you look at different classes, socioeconomic classes, the middle class is very much exposed to borrowing. They have bonds, they have cars that they are paying installments, or they'll be badly affected. And normally, in most cases, they are on their own, especially those who are not relying on because they are high, they rely completely on their salaries. And if those salaries are lost, there's a huge problem. Then you have those who rely on government for what we call social safety net. Those are more lower unemployed, those who rely on social grants. The government will have to continue to support them in various ways. And there are those who are kind of fall in the gap, and government needs to think, and civil society needs to think hard on those, especially those who are high level of working class. They are in between. So it affects everyone, the inflation as well as the interest rate. Yeah.
So as we wrap this conversation, Dr. Mfeka, so is South Africa's economy right now on a recovery mode, or are we just winging it? And also, at what point does this conversation turn to looking at the struggles of tax-paying South Africans?
Well, the economy, if you look at the outlook, it's projected downward. So we are in a bit of a challenging situation. if we don't improve on efficiencies in the economy, even though the global economy can improve, as it is expected, as the conflict subsides in Ukraine, we may see improvement in the global economy. However, the domestic economy still faces many challenges. If we can improve on efficiencies, not only in government, also in households, in businesses, improve productivity. You know, in South Africa, we may have a good macro economy, national policy or macroeconomic policy, but the challenge is always now at a microeconomic level where individual households and businesses must make sure that they improve on productivity, efficiencies. For instance, if I send you an email and you don't return it, it takes a week or two. That's an efficiency because certain things can fall, away, and we may lose on certain big outputs and outcomes that the country needs at this point in time. Monies are lost, incompetencies, corruption throughout the system. We need to fix those so that the economy can stabilize and begin to grow. I say, Sakina, the barrier to leadership is very low in South Africa. If you're running a government department or a municipality, yours is to simply maintain and make sure things are running efficiently. Before we talk about expansion or new big projects, we need electricity, for instance, to be available. That's the basic idea. We need to just function properly and maintenance to happen.
But unfortunately, we know we're not getting any of that, Dr. Mfeka, at the moment. But we have to leave it there. Thank you so much for your time. Dr. Bheki Mfeka is a development economist and strategist, just speaking to us there about the latest interest rate hike and, of course, what it means for us as South Africans going forward.